What's the difference between a rental property insurance policy and a standard homeowners insurance policy? A standard homeowners policy is designed for owner-occupied homes, and rental property insurance policies, sometimes called a landlord policy or a dwelling fire insurance policy. These are designed for tenant-occupied homes, and it is important to make sure that your property is underwritten the right way. At its core, these policies will operate very similarly. They both will provide coverage for the actual structure itself, the actual home. And it is important to make sure that this coverage is based on the replacement cost value of the home and not just the market value, not just what you might be able to sell it for in the real estate market. But a rental property insurance policy will typically have less personal property coverage, and it is common for a landlord policy to cost a little bit more than a standard homeowner's policy. Since you are not the one living there, the insurance company takes this into account and the premiums will typically be a little higher. And then both policies will have liability coverage included as well. It's important to make sure this coverage is maxed out at either $500,000 or $1 million, depending on what the insurance company offers. And in either situation, it can be worth looking into umbrella coverage for added liability protection. And then if you do have a rental property deeded to maybe an LLC, make sure this is included as a named insured on the insurance policy. This can be a small detail, but very important. Overall, both policies will be very similar, but obviously have their own nuances. So if you're looking for help with your coverage, feel free to reach out.